when I see the economy heading for a recession or a depression or a deflation, I want to focus my ownership of gold when I think of precious metals. You can have some silver, but it's mostly gold because it's pure. It is a pure form of money. So we knew that in nominal rates were capped at zero. They weren't going anywhere, yet inflation was going to tick up, which means real rates are falling, which means you got to buy gold with both hands. That is not the same calculation as when do I buy copper.
Due to its reputation for being a safe haven asset, gold tends to perform well during a recession. For example, when the stock market collapsed in 2007, investment demand for gold spiked and continued to rise, and gold doubled in value between 2007 and 2011. Similarly, with fear and uncertainty at an all-time high during the COVID-19 pandemic, the price of the metal hit record highs, as did inflows of gold-backed exchange-traded funds. Michael Pento, a prominent financial expert who holds the position of president and founder at Pento Portfolio Strategies. Pento foresees gold appeal peaking in recessions, citing its allure during falling nominal and real rates. Gold trended upward this week, with prices rising over 1% as Federal Reserve Chair Jerome Powell signaled on Friday that the central bank will maintain its 2% inflation target and isn't looking to cut rates anytime soon. The latest Kitco News weekly gold survey shows that most retail investors expect gold prices to post gains during the week ending September 1st. Meanwhile, market analysts remain cautious and evenly divided as they head into the last week of August. On the other hand, Pento analyzes silver as a dual-use metal with its behavior influenced by factors like industrial demand, including photovoltaic cells. Even so, global photovoltaic demand for silver has grown at a compound annual rate of 12% over the last decade, according to the Silver Institute's World Silver Surveys. China is now the leader in solar panel manufacturing, producing 60% of global output. However, Pento highlights gold's significance in economic downturns due to its monetary purity, as major nations' economic performance shapes metal demand. In a recent report, commodity analysts at Montreal-based BCA Research said that gold remains an attractive hedge against an inevitable devaluation in the US dollar as the US debt-to-GDP ratio grows. Now we are presenting you the glimpses of Michael Pento insights from his recent interview with Commodity Culture. Before we continue to delve into this discussion, we request you to subscribe to our channel and activate the bell icon for timely updates.
Gold is money. Gold is real and honest money, currency, money. Call it what you want. I call it money. Base metals and energy are not money. They tend to trade along with the second derivative of growth and inflation. So if you see an economy on a global basis, and I look at the top three nations, you talk about the European Union, China, and the United States. Those are the three nations I focus on most myopically. And if those nations are experiencing recession and disinflation, look what's going on in China. I mean, China can't get off its mat. It's supposed to be this big boom from a COVID reopening. It just never materialized. They're just an over-indebted economy. And I try to explain that to people. They have a huge overhang, a fixed asset bubble they have to work off. There's not much they can really do there. Many parts in Europe, France in particular, Germany, they're just either in recession or about to enter recession. Southern Europe is not doing well either. And the United States is the best of the bunch, but headed into this next cycle of recession. So when you see that waning demand for commodities, base metals, and energy, totally different than gold. So people think of gold as an inflation hedge, blah, blah, hedge against the falling currency. What you really want to look at with gold, you want to look at falling nominal rates and falling real rates. That's when gold shines the brightest. And when does that happen? It usually happens in a recession where the Fed is lowering interest rates, so lowering nominal rates. Gold doesn't pay any interest, so the competition for dollars goes away, right? And then real rates fall, so inflation subtracted from nominal rates is rising. So that usually occurs when? That's especially a salient issue when the Fed starts printing money and goes into QE. So think about when was the best time to buy gold? If you could think of maybe after the liquidity crisis. So you sold it in the fall of 2008, and bought it back, say, in March of 2009. So it's used as a way of raising money in a liquidity crisis, like we had in the fall of 2008. Did well up until that point, and then people just sold everything for dollars. And then after that, it was like, hey, wait, the Fed took interest rates to zero by the end of 2008. They started this quantitative easing program. So we knew that in nominal rates were capped at zero. They weren't going anywhere, yet inflation was going to tick up, which means real rates are falling, which means you got to buy gold with both hands. Silver is a hybrid. So it's a hybrid. It's a monetary metal, and it's also an industrial metal. So you get a little bit of both. So silver might act okay in a deflation and a depression if it weren't for the fact that, hey, wait a second, we're using these the silver for photo cells. So that's going to ease the demand for industrial use for silver. So
Pento dismisses the BRICS trend in his trading due to its prolonged dollar shift tied to eroding foreign trust in the U.S. Treasury and central bank. BRICS leaders have said they want to use their national currencies more instead of the dollar, which strengthened sharply last year as the Federal Reserve raised interest rates and Russia invaded Ukraine, making dollar debt and many imports more expensive. Pento criticizes Powell's response to banking failures, seeing it as contradicting capitalist ideals. Powell acknowledged the sector still had some funding vulnerabilities, as seen in March during the banking crisis in which deposit runs caused the Silicon Valley Bank, SVB, and two other U.S. lenders to fail, though deposit flows have settled down. Let's get back to interview.
So I don't incorporate that to my day-to-day trading because it's a more of a protracted trend away from the dollar. It's more about the loss of faith on the part of our foreign creditors in our treasury and in our central bank. So, and it's more than just protection from sanctions. When people say, well, if I get in trouble with the United States, they're going to freeze my reserves, and then I can't do anything. That it's more than that. It's political, fiscal, and monetary insanity, and it's resembling more and more like that of a banana republic. So it's a combination of the two. It's not just I want to protect myself from U.S. sanctions. It's that I have to have my reserves placed in something that holds its value. And that used to be, after World War II, after the Bretton Woods Agreement, it used to be the dollar. That's no longer the case. I mean, look at the political madness that we have here, where we're, I don't want to get too political here, and I'm a libertarian, so I'm either Republican or a Democrat. But when you see a regime, the current regime, arresting the previous regime, that's something that you see happening in banana republics. And when you see a nation that has embraced free money, 0% interest rates, like I said, for 10 of the last 14 years, that's a banana republic. Look at the nation's debt. We're at almost $33 trillion, 120% debt to GDP. Do you know, Jesse, that by 2040, the CBO predicts that we're going to spend 100% of all of our revenue just to pay for entitlements and interest? This is banana republic. It screams to me banana republic. So yes, I believe the BRICS have to adopt their own currency and back it with gold. So you had a couple of banks fail. So what did Powell do? Did he say, well, that's capitalism and banks shouldn't take in such a crazy risk in cryptocurrency, or had such a large concentration of depositors that were way above the FDIC insurance? No, he didn't say that. What he said was, I am opening something called the Bank Term Funding Program. And he immediately printed $400 billion in the space of 2 weeks. He guaranteed all deposits, FDIC deposits. And this program took every asset, every treasury asset, and every mortgage-backed security of every single bank. It enabled every single bank to take their assets that are still way underwater and becoming more so underwater, and hand them off to the Fed at par, full value, for 1 year. Now, that is a banana republic move. And he did it. It wasn't a big fanfare. A lot of people didn't call it QE. I didn't even call it QE. I call it QE light. But it has the same effect of bailing out the entire banking system because of a few. I mean, I know there were large banks, there weren't small banks, but where's the gales of creative destruction? Joseph Schumpeter used to say. He's a well-known economist. Where are the market forces? The country was built on the ability to fail and the ability to succeed. They're gone, and that's another reason why this country's in big trouble, unfortunately.
With gold's proven appeal as a safe haven asset during economic downturns, its role in shaping investment strategies amid evolving economic challenges becomes significant. How do you see gold influencing investment decisions amidst these uncertainties? Share your thoughts in the comment section below. If you find this video informative, don't forget to show your support towards our channel by giving this video a thumbs up and subscribe to our channel, and turn on notifications to stay informed about our latest videos covering more interesting topics. Thank you for watching.